Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Ben Rains with a couple of retail Zacks number ones, because retail is hot again. But what are they? They're in totally different areas, but both of these areas are, again, hot on the recovery and the reopen. My retailer is Ethan Allen, ticker ETH. Now, don't confuse it with Ethereum. Yes, people apparently are confusing the ticker because Ethereum on some of the chat boards is ETH.x. But no, Ethan Allen is its own animal. And I know some people are looking at that chart thinking, oh, everybody must be confusing it with Ethereum because the stock is on fire. But it's on fire because so much is happening now in housing and obviously in the furniture side of things. When you buy that new house, you buy new furniture. And everybody thought this was just a pandemic play. We were buying desks, we were buying outdoor furniture for our staycations. But no, everybody's continuing to buy here in 2021, giving these stocks a lot of momentum. And Ethan Allen is dirt cheap. Let's take a look at what these earnings estimates really look like, and you'll see why it's so cheap right now. So how good has it been? Well, you can see from some of the fundamentals we have here, both revenue and earnings, how good fiscal 2021 was. As soon as those initial pandemic months passed, everybody rushed out and bought furniture. So you can see here, they made $589 million in revenue for last fiscal year and expected to make 684, so that's 16% gain. Next year, you can see 745 there. Analysts a little cautious on what's going to happen for next fiscal year, which starts this summer, because they think a lot of the demand has been pulled forward. But now we're starting to think maybe it hasn't been, that people are just investing in their house as they're going out and buying new homes. So they want that new furniture, even though they can travel again and do other things that they were able to do in their quote unquote normal life. The home is still vital here in 2021, and Ethan Allen is able to cash in. Now, their manufacturing has risen to past the pre-pandemic level as of the third quarter. So they're already back to doing even better than they were pre-pandemic. They also paid back $100 million pandemic borrowing that they took out right when everything hit. And they ended the fiscal third quarter with over $100 million in cash on hand. So they're going to give that back to shareholders, which they did. They declared a special dividend of 75 cents. They also pay 25 cents a quarter in their regular dividend, and that's yielding 3.4%. So you can see just how good things are with these furniture companies right now. And it's only a matter of, will this continue? But it looks to be. Their retail division saw written orders up 51.8% year over year. Part of that included the shutdown weeks in March, but most of it was not. So that tells you, again, how much stronger this demand for housing and anything related to the house really is. Now, what about manufacturing with Ethan Allen? They have most of their manufacturing in North America, and 75% of their products are made by their own craftspeople here in North America, including the US, Mexico, and Honduras. So they don't have the container and logistics issues that are hitting a lot of other manufacturers out of Asia. They're not shipping it over on the containers that way. They, find other methods in North America to get it up to customers. So they're not seeing quite as long as wait times and things like that, giving Ethan Allen also an advantage over some of their competitors. Now, what do that big earnings gain look like for this year? Well, here it is in the price to consensus chart. You can see things fell off the cliff the last couple of years, along with the share price. You can see that the share price, hasn't been going anywhere for most of the last 5 years. But over the last year, we got this big surge, and now the story is out there and known with these furniture retailers. Year to date, these shares, let's take a look at that, are up 46% year to date, with the S&P 500 up just 11. And over the last year, you can see Ethan Allen has really poured it on, up 180%. But like I said, Ethan Allen is still cheap with this surge in the earnings, trading at just 13 times. So both value with growth. The only underlying question is, Will this really strong demand continue? And it looks to be. So, on the retail side, furniture retailers are among those to watch. There's several, including Ethan Allen, that are Zacks number one strong buys right now because those earnings are all being revised higher as we all are rushing out and still buying things for the home. So, I'm going to turn it over to Ben here with his retailer, which is not on the furniture side, but still looks red hot as well.
Hello, Ben Rains here. Today I'm looking at Levi Strauss & Co., which trades under the ticker LEVI. The historic denim firm beat Zacks' adjusted Q1 earnings estimates by 41% on April 8th, with an average beat of 54% now in the trailing 4 periods. Levi's revenue did still slip again, but guidance finally shows a return to growth that could be boosted by economic reopenings as more people find a reason to look their best again. Levi's denim brand has been an industry leader for decades, and today it sells various offerings for men, women, and children all around the world under its Levi brand, as well as Dockers and others. Levi returned to the public markets in 2019 and spent much of the last year improving its digital business. More importantly, executives are focused on diversifying beyond denim bottoms to adapt to changing fashion habits. The company's CEO said Levi expects half of its revenue to come from products that are not denim bottoms over the next decade, up from 11% in 2015 and 21% in 2020. Investors should also remember that nothing is forever in the cyclical fashion industry. Therefore, the athleisure craze could certainly slow down. Levi's price performance shows that Wall Street might already be anticipating this shift, with the stock up 45% in 2021 versus Lululemon's 10% decline. Levi's has also outclimbed its industry's 30% jump. And still at $29 a share, Levi trades just below its recent records, and it sits near RSI levels that are neutral at 55. The stock also trades at a slight discount to its industry at the moment, and Levi management raised its dividend for the second quarter. And pent-up demand and economic stimulus could benefit as people revamp their wardrobes. Zacks estimates call for Levi's 2021 sales to climb by 24% to $5.5 billion, with another 10% growth expected in 2022 to see it reach $6.1 billion, above its pre-pandemic levels. And its adjusted earnings are projected to soar 430% this year, with FY 2022 set to pop 20% higher. Levi's positive earnings revisions help it land a Zacks rank number one strong buy at the moment, and all 4 of its brokerage recommendations that Zacks has are either strong buys or buys. And that does it for top stock picks. Make sure to also check out our latest Zacks.com/promo page for a peek at our blockchain innovators. This technology grows by an estimated 8,500% by 2024.